Good day traders, so this is Stefanos on behalf of Tixee, and in today's video we'll be giving an outlook of the market for the week of the 17th until the 21st of January. Remember, we host these videos on a weekly basis, covering both a weekly outlook as well as a look back video. The look back video is the one that basically covers what happened throughout the past week, whereas the outlook, which is the one that we're doing today, I will be looking as to what will be taking place in the financial markets next week. Before we get started, please note that all of the ideas discussed in this webinar are my own opinions, and they do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not necessarily indicative of future results. Now we'll be kicking off today's video by looking at stocks. If you've watched the past couple of webinars we've held, you have noticed that we've been talking about the earnings season in the US. Now the earnings season is basically the period where major US companies come in and give their financial figures with regards to the Q4 of 2021. Last week, we kicked off having some major US banking institutions providing their figures. Namely, we had Citigroup as well as JP Morgan reporting their numbers, both of which gave negative outlooks, and we more or less saw the impact that this had on their stock prices. In case you missed the look back video, it will be uploaded on our YouTube channel. But for the sake of covering what happened with regards to Citigroup and JP Morgan, we can very quickly see the charts for both of them. Like we said, both of the companies reported negative figures, and we saw that Citigroup on Friday at the open, it plunged by about 2.5%, actually 3.5% to correct. And then if we look at JP Morgan, we'll see an even worse scenario. The stock price actually opened by dropping more than 4% towards 4.5%. Again, both of the companies reported negative numbers, so you can see what kind of impact earnings season can have on the stocks and the kind of trading opportunities it can present ourselves with. Now, looking at next week, like we said, we're going to have obviously more banking institutions reporting their numbers. Namely, we're going to be having Bank of America and Goldman Sachs. So very quickly, I'll just pull up the chart of Bank of America. We can see the share price is trading above the 50-period exponential moving average, which is this orange line here. And we're looking at the daily time frame. And the RSI is also above the 50 level. It's sitting between the 50 and 70, round about at 58. So it's going to be interesting to see how the share price will be moving next week, depending on the reports that we're going to be having with regards to the financial figures of Bank of America. And if I switch the chart to Goldman Sachs, we can see that the price dropped below the 50-period moving average on Friday. It also dropped below the 50 level on the RSI. So again, it's a little bit of a contrasting story compared to Bank of America. But again, if we get a positive figure, we can see the price running back up into this area. If not, it could just continue sliding lower, depending on how big of an impact the figure and how much of a deviation it's going to have from the actual expectation figure. So this is with regards to the banking institutions. Another stock that is good to keep an eye on is going to be Netflix. Now, Netflix is also going to be releasing their numbers next week. If we're looking purely at the technicals, we can see it has been trading below the 50-period exponential moving average since basically December, so since a month ago. The price on the RSI, it's showing currently an oversold reading as it's sitting at the level 23.51. So it's going to be again interesting to see how it's going to play out when the figures come out. Another report came out on Friday basically citing that Netflix might be looking into increasing its subscription fee. So again, it depends how investors going to see this, because obviously this can obviously drive revenues higher. However, people might think that raising subscription fees is going to to basically push subscribers out of Netflix and maybe into other streaming services. So again, just a stock to keep an eye on, because not only it's going to be releasing their earnings figures, but also we have this report, which is going to be good to see how it's going to impact the share price. Now, another thing with regards to the US market specifically is that on Monday, it's actually a bank holiday. We're going to be having Martin Luther King Jr. Day, which is a bank holiday in the US. There's not going to be any sort of trading with regards to stocks. With that being said, like we mentioned, we have the rest of the week where different companies are going to be reporting figures, and which be very good to see how that is going to impact the overall volatility and those stocks that we mentioned earlier on specifically. So now moving into Forex, we will be having a number of events taking place into Forex as well that could shake up the markets. Remember last week we had the inflation data coming out of the US, where again, if you missed last week's the look back video, basically the US had an inflation reading of 7%, which is a level that has not been seen since the 1980s. So obviously this shook up the markets quite a bit. We saw the dollar index falling. So if I just switch onto the dollar index, we see that it had sort of a dip, which other currencies which are directly related to the dollar index took advantage of, and we had some minor rallies. Namely, if I look at the euro dollar, we can see that it briefly rallied last week, and also the pound dollar, similar story. It also had a minor rally, crossing above its 50-period exponential moving average, as well as the 50 level on the RSI itself. So looking at next week, the events that could drive some volatility in the Forex markets, we have the employment change for the UK coming out on Tuesday, followed by its inflation data on Wednesday. Both of these numbers are quite important. Again, we saw the impact that the inflation data of the US had on the dollar index itself and then on other currencies. So depending on the readings we're going to be having for those two events, we can expect some trading opportunities for the pound or any currencies that are related to the pound. Then we're also going to be followed by Eurozone's inflation data, which will follow suit on Thursday. Again, just focusing on the inflation data of the US, the Eurozone is obviously a quite important region to cover. So depending on the reading, we could see if I, for example, pull up the watch list here. Let me just switch it to Forex. And you can see pretty much here all the crosses with the euro, including here we have the euro dollar, which again are currencies and pairs that can present opportunities given the events that we're going to be having for the euro. And if we look at gold, we have the general tendency of gold behaving in an inverse manner with regards to the dollar. And given dollar's weak move last week, we saw a rise on gold. We also have the geopolitical tensions being covered between Russia and Ukraine, which if they rise, we could potentially see investors flocking away from riskier assets, such as stocks, and back into safe havens like the likes of gold itself. So it's going to be quite a few interesting weeks ahead, depending on what reports we're going to be getting out of Russia and Ukraine, and whether tensions escalate and the impact that these would likely have in the financial markets themselves. And lastly, we will be looking at crude oil. Again, the event to keep an eye on for crude oil is the crude oil inventories. Now remember, this week, usually it takes place each Wednesday, but this week it will be taking place on Thursday instead. I suspect it's due to the holiday that's going to be taking place on Monday, so it's going to push everything by a day forward, hence why we will be having the oil inventories taking place on Thursday instead. Now looking at the chart, oil has enjoyed quite a decent rally. It's looking back at the high here of $85. We can see it enjoyed a rally of 4 consecutive green weeks. Last week, We also had a positive oil inventory report, in the sense that the oil supply was reduced greatly, more than what the expected figure was, and which is why we also saw a further rally on oil last week. So this week again, the inventory is going to be taking place on Thursday. Depending on the numbers, we could see, if we're looking at the technicals here, obviously the resistance zone is right up here. So when the price reaches this point, if I just switch to the daily, we can expect some market opportunities to arise. We can also see that it's trading quite above the 50-period exponential moving average. And usually this average, because just like the name suggests, it's the average price that has taken place for the past 50 periods. So in our case, because we're looking at the daily time frame, the past 50 days, so we can see it's deviating quite a bit away from it. So when the price reaches this level up here, it's going to be very good to see how the price is going to react, and depending on the report itself, how it's going to be playing out for the next couple of days throughout next week. So yeah, this is all with regards to the review for the outlook of next week. I hope you enjoyed today's video, and I'll catch you all traders in the next one. Until then, trade safe.